So welcome back in the next lecture of public finance. So in the last lecture of public finance, we discussed about the recommendations of 14th Finance Commission, and we discussed the horizontal and vertical devolution. Then we discussed the second function of Finance Commission, that is the grants in needs. Then we discussed there are 5 types of grants which were given by earlier Finance Commission, and this Finance Commission didn't give any grants in aids related to sector specific and state specific. So this Finance Commission gave grants related to disaster management 55,000 crore, then grants to the local bodies 2.87 lakh crore, and then grants for the revenue deficit of the state, that is also known as the gap filling approach. So they gave 1.94 lakh crore. And then we discussed the small few other recommendations of 14th Finance Commission. They were like the PSUs, they divide into 4 parts, and then they discuss the municipal bonds, and there should be a regulator for rail, road, and all these things. So all this thing we have already discussed. So in the next lecture, we are going to discuss the reforms of public finance. Now, these topics are highly relevant from exam perspective, be it any exam. So these topics, just like the FRBMA Act, the amendment in the FRBMA Act, then the insolvency and the bankruptcy code, this is highly relevant. Then the VAT, then GST, all these things are they are very, very important from exam perspective. So today we are going to discuss the first reform, that is the Insolvency and Bankruptcy Code 2016. So before starting this reform, first I want to cover this small topic of types of business organization. In Indian economy or in any economy, there are n types of business organizations. Like few companies they are private limited, few companies they are like public limited, few companies partnership, few proprietorship, Hindu undivided family. So basically there are 6 types of business organizations which exist in India after the Companies Act 2013. Earlier we had only 5 types of business organization, but now we have 6 types of business organization. So few points I'm going to discuss about all these types of business organizations. The first one is proprietorship. Proprietorship is nothing but it belongs to only one person. It means one person will be there, one promoter will be there, we can say. Only single promoter will be there, and he is the company and he is the owner of the company. It means there is no legal difference. If this person A starts a company, maybe Infosys, so there is no legal difference between A and Infosys. If suppose Infosys files bankruptcy, so A has to return all the money which Infosys borrowed. So A has to sell its even personal property, whatever other assets A is having. A has to sell these assets to repay the debt of Infosys. If Infosys borrowed 100 crore rupees from any bank, or if A borrowed 100 crore rupees from any bank, it is one and the same thing. It means there is no legal difference between the promoter and the company. It is one and the same thing. Whatever will be the profit of Infosys, that belongs to A. No partnership is there. Nobody else is there. If suppose somebody sues A, there is some criminal charges on it or something, it means that is having a direct impact on the company. Then the second type of business organization is partnership. Now partnership can be of 2 types. First one is the limited liability, and the second one is unlimited liability. So limited liability concept says, suppose this is company and the revenue of this company is again suppose 100 crore, and A started a company, but A's money, promoter's money, is only 10 crore rupees. But this company Infosys, they borrowed 90 crore rupees from somewhere else. Maybe from they took a loan. So they took a loan of 90 crore rupees. A invested 10 crore rupees, and A is the owner of the company or the promoter of the company. So the total is 100 crore rupees. But suppose tomorrow Infosys files bankruptcy. The functioning of Infosys fails. Infosys is forced to file bankruptcy. In that case, Infosys has to return this 100 crore rupees. but A's liability to repay is only 10 crore rupees. The remaining 90 crore rupees will be sold from the assets of Infosys. So this is known as limited liability concept, which means the liability of the owner or the liability of the promoter is only for the subscribed capital. This 10 crore is known as subscribed capital. It means the money invested by the promoter in the company, that is known as the subscribed capital. So this is limited liability thing. The unlimited liability says that there is no liability of A only till subscribed capital. A is responsible for full 100 crore. Even if Infosys borrowed 90 crore from somewhere else, but still, because A and Infosys, they are the same legal entity. So there is A and B, we can say. In case of partnership, it is more than 2. In case of partnership, it is more than equal to 2. So it will be by A and B. So 2 promoters are there. So if Infosys borrowed 90 crore rupees, but A and B, they have to return this 100 crore rupees. So this is known as unlimited liability partnership. And the first one is known as the limited liability partnership. The next one we have is Hindu undivided family. So Hindu undivided family, it is like a partnership only, but there are some minute differences. These minute differences, or we can say the major differences, these differences are, first of all, there are some conditions which you have to fulfill if you want to start this type of business organization. It is like the family should be together from last 3 generations. Who can be the promoter of this company? Only one family. In case of partnership, A can be an individual, B can be, maybe A is from Delhi, B is from some other state. But in case of Hindu undivided family, the owner A and B, C, and number of owners can be there, but they should be from the same family. There should be blood relation between A, B, C, and D, or they are the relatives. The next thing is, suppose A is there. A is the owner of this HUF. Owner means the owner in case of HUF is known as Karta. It is usually the oldest male member of the company who is known as the Karta or the owner of the company. So in case of HUF, you have to fulfill some conditions like you should share the same kitchen, the family should be residing in one house only, they should share the same roof, then up to 3 generations they can become a member of this, or they can become the promoter of this company. But what is the positive thing about this HUF? The positive or the benefits of starting such type of business organization is you will get some tax incentives. These tax incentives is, in the taxation chapter we discussed that there can be 2 types of taxes. First one is the progressive tax and the second one was the proportional tax. We discussed even the example of progressive tax was personal income tax. In case of proportional tax, it was the corporate income tax. In case of proportional tax, even if your income is 2 lakh rupees, or your income is 10 lakh rupees, or your income is 50 crore rupees, you have to pay a fixed amount of that particular tax, and that is 30%. For Indian companies, it is 30%. So either your income is 50 crore, profit is 50 crore, 10 lakh or 2 lakh, you have to pay 30% of that. It means this small company whose profit is just 2 lakh rupees also has to pay 30%, and this also has to pay 30% of this. So if you are registering as Hindu undivided family, your tax liability will be of PIT and it will not be of corporate income tax. So if the profit of your company is 2 lakh rupees, you don't have to pay any tax, because in case of personal income tax up to 2.5 lakh rupees, there is no tax liability. Afterwards, then if it is up to 5 lakh rupees, then it is only 10%. 5 lakh to 10 lakh, it is 20%, and then it becomes the 30%. So it means if you are registering as the Hindu undivided family, you are getting some tax benefits. So this is known as Hindu undivided family. Then we have the private limited company. Private limited company, is again a type of company under which the members will be 2 to 50. There cannot be more than 50 owners or 50 promoters of the company. So it should be more than 2 but less than 50. But one other characteristic of private limited companies, they cannot issue IPO. IPO means, I think in the first lecture we discussed, if you want to start a new company, your own money, then you can take a loan that is known as debt, and the third one is you can dilute the ownership. So if you are diluting this ownership to the general public, this is known as IPO. So this IPO, FPO, rights issue, private placement, all these are the ways through which you can dilute the ownership. But if you are selling to the general public for the first time, it is known as IPO. In detail, we are going to discuss this in the capital market chapter, shares market chapter. So you cannot issue IPO. A private limited company cannot issue IPO. They cannot register themselves with the SEBI, or in the sense they cannot register with NSE or BSE, the share markets. So this is what the private limited company is. The members will be 2 to 50, but they cannot issue the IPO. Then we have the public limited company. In case of public limited company, the owner should be, the number of promoters should be more than equal to 7. And they can issue even the IPO. But this, don't get confused with this word public limited. Public limited, or it is also known as limited, when nothing is mentioned. Suppose only 7 is mentioned. So by default 7 means plus 7. It is not minus 7. Similarly, if only limited company is mentioned, suppose somebody is saying Infosys is a limited company, TCS is a limited company, it means it is a public limited company. So we can say that public limited company, it can be in public sector or it can be in the private sector. If a company is in the public sector, it is known as public limited company. If it is in a private sector, it is known as private public limited company. For the first public limited company, the example is Coal India Limited, ONGC, IUL. And for private public limited company, the example is, we already discussed, Infosys, TCS, all these companies are there. Then we have the sixth or the last type of business organization. So this one-person company is a new concept in India, but it is not a new concept in case of Western world. So by Companies Act 2013, we came up with this concept of one-person company. So one-person company and proprietorship, they are related to each other. In case of proprietorship, also there is only one promoter. But the thing is, suppose this promoter has started, A is the promoter, and A started a business in cement. A now again want to start a business in steel. But there is a risk associated with this business as well as this company. Because if suppose tomorrow, unfortunately, this company who is producing steel, it filed bankruptcy. It's not working well, and finally A is forced to file bankruptcy for this company. So in that case, A has to return the money. Whatever are the liabilities of this company, steel company, A has to repay it. Now from where A will get? A will get from its own assets, or A will be forced to divert the profit of this cement company to this steel company. So A was not specializing in different businesses, different sectors, because there is a risk associated, because there is a concept of, in this first, second and third, there is unlimited liability. In case of private limited, public limited and one-person company, there is limited liability. It means in one-person company, if this happens, so A will be responsible only for the subscribed capital. Whatever A invested in this steel company, A has to repay only that much amount of money. Nobody can force A to divert the profit of cement company to this steel company, because there is a limited liability concept. And this is the reason that although the Kingfisher Airlines is about to file bankruptcy, it's not at all working from last 3 years, but still Vijay Mallya, Vijay Mallya was not forced by the government to sell the other assets of Vijay Mallya to repay the loan which Vijay Mallya's company Kingfisher Airline has taken from these different banks, because Vijay Mallya's responsibility was only till the limited liability, the subscribed capital. Whatever this guy Vijay Mallya invested in Kingfisher Airlines, Vijay Mallya was responsible only for that amount. So these are the basic things about the types of business organization. So these factual things are relevant from exam perspective. Like in private limited company, can private limited company issue IPO? This 2 to 50 is there. It's more than 7 is there. Can public limited company be in private sector, or it can only be in the public sector? What is 2 3 statements about Hindu undivided family? What is karta? Then we have the partnership. Is there a concept of only limited liability in partnership, or there can be unlimited liability in partnership? How proprietorship is different from one person company, whether one person company is a new concept or it is an old concept? So such type of questions can be asked.